Hello and welcome to week number 19 of the year. This weekly review will be covering this week and next week, as there won't be a weekly trade call out for the following week. So this will cover a 2 weeks period basically. We're starting off with the CFTC report from the Scotia Bank. It is incredible how much dollar bears have came out from every asset class we're looking at. So the Canadian dollar continuously building since last week, actually an extra $1 billion added, and on the euro and the pound there was some buying as well. On the pound actually there was a bit of reduction, but on the euro was a little bit of buying, which overall led to euro performing better, and the USD falling out a little bit. We see a little bit built up in the Kiwi as well. Expecting this trend to continue into another 2 weeks. One of the important things that you didn't see on a calendar was the quarterly treasury refunding, where it looked like they're about to borrow a little bit more than it did borrow last time. That tends to pressure yields and also dollar a little bit. Having a quick look at inflation expectation, I overlaid this with the GBPJPY. It looks like we are hitting really high levels not seen since 2018. I'm expecting GBPJPY to pick up the pace with this. Coupled with that we have Bank of England extremely bullish on the economy and starting this hawkish shift. They started tapering their assets, and overall I'm expecting for GBPJPY to start climbing above its 150, his recent ceiling of 152, and start penetrating to 153 area quite early next week. I've brought up a chart that is really important to understand why dollar pairs are moving the way they are, including gold. So gold is in the orange and the yellow is the Fed Funds Futures. Fed Funds Futures is basically an instrument that speculators use to hedge against future interest rate hikes by the Federal Reserve, and it works in inverse. So if it goes down, market is expecting for rates to rise. If it goes back up, that means they're thinking that the rise in rates will slow down or not as fast as anticipated. Now a few things happened early April, late March, that gave the indication that here we are about to bottom out on this whole idea. From my experience, usually when they start pricing in hikes, they continue doing that and they won't back off as they did. But because of the job data came in not as strong as they expected, the whole idea of that the Fed will be aggressively raising rates or hiking is coming off the accelerator. It means you might see some higher levels being met on the Fed Funds Futures, which does carry gold with it. And I'm going to overlay this with another dollar chart, one of the most popular ones and my own home turf which I trade, EURUSD. So on the short term you can see that Fed Funds Futures and EURUSD, perfect match. You can kind of understand why the moves happen the way they are. I'm expecting that this entire move to start chopping about, but resolve towards the upside in the very near term. Long term I expect it still to come down, but for the near term, this week and the following week, I expect us to chop and move upside. But it means also for EURUSD to start climbing above 122 in the very near future as well. So this to that, wanted to quickly explain what is moving markets in those currencies. So there is, I've already mentioned euro. Obviously I'm looking for euro to start climbing above 122, 122.50 in this area I've pointed out here. I like to see that being met. Usually what you tend to see after NFP, you see the price jump from the NFP being touched again, so which was about here. We're still a good chunk away from that, and a lot of the times you see this being filled before making a real leap higher. So I still like to see a little bit of chop, but I won't be too worried if I don't see it. I've got a little bit more prominent on the GBPUSD chart. GBPUSD somewhere around these levels, or even this London fix we created from last week. If I see a bounce and above it, I will be quite aggressively long, as if you don't fill this this NFP jump, it won't be a game changer so much, as we are in acceleration of repricing a lot of things in the market right now. So GBPUSD above 140 in the coming weeks, EURUSD towards 122, and another asset I have my eyes on is AUDUSD, which this London fix is quite pivotal for me. If I do see a move above this, I like to long it against the risk management a little bit of these lower levels to start capturing the 179.50s, which is around these levels. I'm expecting a move like that. We have an important data point for the Australian economy coming out next week. I'll take you through the calendar in a moment. I want to take you through the pairs first and the things I'm anticipating. Another thing I'm looking at is the GBPJPY. I'm really interested to see a move higher in that asset. So we had a few London fixes actually scattered on that pair. You can see that they're all convoluted here, and that usually means we see a strong breakout once those levels give away. I'm going to try to find the bottom of all of this, which comes in around here. So if you cluster these all together, you should see a strong move. I'm hoping for this to resolve to the upside and then really catch some fire and momentum. There's risks to all of the trade ideas I just mentioned, which I will talk about in a wee moment. If those risks materialize, there's still good momentum and volatility to trade at the other side. But the most plausible things for now is for all of these to resolve to the upside. And also having a quick touch on what we discussed last week. So we had the Dow Jones. There was a very interesting dynamic where I said if you recall, Friday doesn't take out Thursday's high. So Friday was this red candle there was the Friday close from previous week and failed to take out Thursday's highs. And the statistics I've gathered is whenever I see a scenario like that, 84% of the time you find that these highs get taken out, and this time just played along again really neatly. Actually, we had a massive rally after that, but the immediate reaction was a little bit more interesting to me, that we saw this big punch higher, punctured above those highs. And if you have a keen eye, you will have noticed that since this candle, we were sitting in a multi-inside day scenario, which I've mentioned a wee while ago as well. So it's really building up for several weeks, and then finally this explosion higher, which was quite interesting to see. Following next week, we have a few data points that are interesting to me. So obviously we have retail sales from the Aussie. I like to see how that reacts, and if I can see that sort of scenario going above that. And while I have here on the Aussie, there's an important report coming out, which is on, I have a feeling it was around Friday, might be wrong. It's basically the annual budget coming out. Not sure if that's in this calendar. Yeah, it is. So Monday we have the annual budget release. It doesn't happen a lot, and this budget release is a little bit more important probably than the last ones, as it does feed a lot into what the RBA is doing as well. Last report we had around on the 6th of October. Quick check back, see if it had any significance back then, and there was the 6th of October. So on the day itself we saw quite a dramatic move down, and then the rest of the week saw it all reverse. So it might be that this coming week we see some similar again. Ideally again over the next 2 weeks. Now exactly what data will happen or at what price level is a bit more difficult to it comes down to negotiating that as a trader, but from an analysis point of view, over the next 2 weeks we have a clear shot higher. That's covering the AUD. Important thing I have for the euro is my ZW, the German economic sentiment, basically coming out around this day on Monday, and I like usually how USD reacts around that report. Sometimes you find is that EURUSD drives up, and then they use this report to fill the gap on the NFP. And pay attention to that if that happens, because I think it will be a trade worth taking, even if it's counter trend. Sometimes they use good events to drive just price the opposite and fill the NFP gaps. And the stats for filling NFP gaps is incredibly high. So it's really a trade worth losing money on. If it does work, if it doesn't work out, if it does work out, I'm hoping it will make you a good profit and myself as well. So keep an eye out if that report is getting used to do a counter trend truth. Towards the end of the day on Monday, we'll have the London fix obviously, and we have loads of Fed speakers. So I'll be really watching what is happening in the back end of Monday and also actually Tuesday, because sorry, I'm ahead of myself here. So that report will be coming out on Tuesday, and on Monday we'll still have the Monday London fixes. So if by Monday and Tuesday we fill these gaps, great, the NFP jump. If we haven't, I'll be very interested to see where the Monday and Tuesday London fix ends up. Why? Because it will play hand in hand into what pound will do around its quarterly GDP, and also play in hand what will we do during the inflation report of the United States. Quickly show you GBPUSD. GBPUSD tends to react extremely strong around and post the CPI reads on the United States. So that happens once a month. You tend to get good swing trades out of that. But ahead of this report, usually 1 or 2 days to get a little bit of chop. So what I'm saying is, do not try to catch the bigger swing trades until this report is over. Keeping in mind that this report here on the euro could give you an opening to fade the euro strength. Overall, we're still looking for more upsides. If you want to trade with a trend, which is a safer way of approaching this market right now, I'll be quite happy to wait post CPI and then get a little bit more aggressive on risk taking on the euro and on the pound. Further on Thursday, we will have unemployment claims, which isn't always a big mover, but will be a little bit more interesting, specifically because we had such a huge miss on the NFP. So they'll come out on Thursday. You tend to see a lot of pairs move around 2 o'clock actually, so usually about half an hour after this report. And that all comes down to where other pairs are trading by that time as well. So come Thursday, and all our pairs are a little bit in decline. I'll be using these events to actually buy into weakness. But if they're already pushing highs, a little bit exuberant for the week, then maybe these reports will be more watch and see events. So it's really comes down to a little bit of negotiating markets and using a bit common sense. You know where the direction is, you know where your volatility pockets are. You know you're most likely to see a little bit of consolidation on Monday and Tuesday, and then a huge pickup post CPI report, just to finish the week with a good strong retail sales, hopefully to drive up your yen pairs. Specifically, I've got my eyes on GBPJPY to really bring out a huge upside and then crack on that side. So I said there's the risk to all of these, and the risk to all of these and to all of that analysis is what happened in the US bonds on Friday. So we had this terrible miss on the NFP, which drove down US 10-year yields, but then we had this fabulous daily reversal. Now, there is no particular reason why this reversal happened, apart from there's people that just want to sell bonds, so they kind of did that. They use these levels because they're kind of cheaper to do that thing. Now, does that mean that this candle will start a whole reversal? That may very well be, because if that reversal happens, you are still quite good to sell yen pairs, but you're going to have a tough time making money out of buying euro and GBP, because the acceleration usually tends to put pressure on other currencies. So keep an eye on that. There would be a risk in assessing if buying EURUSD and buying GBPUSD will be profitable. If you see that the 10-year yields getting really aggressive, catching momentum, I would hold off and just sell yen pairs until this starts to normalize. Overall view is that these highs and these lows, so about this bigger range, is supposed to hold, and as long as that holds and consolidates, you have the reflation trade going, and EURUSD and GBPUSD should move higher. Again, it's more of a 2-week view I have, and timing these comes down to really negotiating the calendar and getting the right prices. But you know the direction, you know where the risks are, and you can balance it from there. Don't get too aggressive on swing trades early in the week. I don't think you will get the take profit targets you're looking for, where towards the end of the week it will be a little bit more interesting. Last thing I like to cover is EURGBP, because I think we have another long-term trend trade coming up in that, which is around these levels. So this orange line is sitting about 87.39, give or take 10 pips. These price levels will not always be accurate to the pips, specifically on a pair like EURGBP, where there's loads of hands involved. But my opinion is we will see this line at some point over the next few weeks. I'm looking for a rejection to start selling and looking for much lower levels and actually starting another trend trade to hold throughout the summer possibly. That concludes this week's analysis. It was a little bit of a longer cover because this will be covering this week and the following week, which will come up, which is the Fed minutes, where I'm expecting all of this to really resolve. All the trade ideas I have by then hopefully have settled into a tone which is which opens up the theme for newer trades to come into the post those weeks. I'm wishing you all a great coming 2 weeks profitable. Keep your risk in check and understand really when there's volatility and where there isn't, so you don't get chopped up into meaningless markets. That's all from me. All the best.